Let's talk about the future with taxes, like what is to be expected with the new laws with taxes.
Oh, well, first of all, I want to congratulate the real estate lobby because they've done a really good job of protecting not only realtors, which of course is important, but also real estate investors and real estate owners.
Welcome to the Jennifer J. Hammond Podcast. Jennifer is a licensed realtor, educator, speaker, and best-selling author. Jennifer's goal is to help you find your yay in every day.
I'm so excited. We are streaming live into Clubhouse. We are on YouTube live, and we have the amazing Linda Marlor, the tax lady extraordinaire. Yay! Welcome to the show, Linda.
Oh, thank you. Thank you. I brought my magic wand so we can talk about magic deductions.
I love the magic wand. And that's exactly, as entrepreneurs, as real estate agents, but also as real estate investors, there's all sorts of different aspects of taxes that are so often overlooked. And, I know we've had conversations like this on my radio show for years. And so one of the things that we can never say it enough, because if we can just help one more person have one more deduction that they overlooked, it's so, so valuable. And I love your story. So we're going to talk about three things today. Number one, it's really important. I want people to understand your background and your passion for helping people understand how they can pay less in taxes, and it completely legitimately, not in some kind of weird gray area that, again, one of the things I love about it is you have the exact code, you understand it, you know it, and you love it. But number two, as entrepreneurs, we need to know what are all the tax deductions that we can get that will legitimately lower our business so that we can spend more money on growing our businesses. And then number three, we want to talk about the new tax laws. Anything that is being proposed, is being talked about, what should we be aware of? And sometimes we need that call to action of we need to call our congressmen, congresswomen, and get involved in the process, because so often we step back because we don't understand taxes. So, and of course, I'm going to put the one more ... We're going to have fun with Linda because she loves taxes and she has a magic wand that actually allows us, there's a magic wand to go ahead and erase taxes, because the more you know, the more you can empower yourself to make good decisions. So let's go ahead and let's start at the beginning. Just so anyone who doesn't know you, which I think it's a shame if they don't, the amazing thing, you have taught continuing education classes, not only for licensed real estate agents, and I'm licensed in Virginia, D.C. and Maryland, but I think it's so important that as an entrepreneur, I've always owned multiple businesses. I've never been good at just doing one thing. I've always loved doing multiple businesses. And as entrepreneurs, we need to know about these tax deductions. And there's so many that we just don't understand. So you come from a background of being a licensed real estate agent. Will you share your story with us?
Oh, yes. It was all just totally by accident, because when I went to college, I was studying to be a simultaneous interpreter because I speak several languages. And after a year or so, I realized that I would have to spend the rest of my life perhaps traveling all over the world, which wouldn't be so bad, but also teaching. And at that time, when you're only 19 years old, you don't think about teaching as a career sometimes. So I asked my father, please, could I change my major to business, because in the school where I was studying language and linguistics at Georgetown, it was all girls, and I'd been to all girls schools all my life. So my father, of course, said, no, if you change your major, it's going to cost a lot of money. It's going to take you longer. And he said, and besides, you've never had a job. And I said, well, if I could get a job and keep a job for 6 months and show you that I could learn some business, then could I change? So he said, yes. So I had a girlfriend from high school who was keeping the books at a real estate company. And I was very lucky because it was a little real estate company and they did commercial and industrial real estate. And she didn't really need the money either. So she said, okay, you can do the job and I'll coach you how to do it. And then after 6 months, you can give it back to me. So when I was working there, they found out that my father was a doctor and he has the president of the medical association for DC, Maryland, and Virginia. And they said, you know something, you need to get a real estate license because then you could sell things to your father's friends. And besides that, you're not a very good bookkeeper. So please don't fire me. I'll do anything. He said, well, then you're going to take this book and you're going to learn it. And you have to, in these days, you had to go to Baltimore. In those days, you had to go to Baltimore to take the test. So bottom line, in order to keep the job, I studied the real estate book. I went to Baltimore. I took the test. I passed it. I don't know how I did that because I was desperate, I guess. And so I started doing real estate thanks to the broker who was coaching me about how to deal with investors. And after a few years, I made a lot of money. While I was still in college, I had my own Mercedes paid for. I bought a beautiful house in Bethesda, right near my father's house. I made so much money. I got married. I had a baby. I had a live-in housekeeper to take care of my baby.
Wow.
And then I realized I was paying an awful lot of tax. So I decided, whoops, we got to figure out how to do this. So things in real estate were very easy, to sell. You sell one office building a year, and that was all the money you needed. So I started working part-time with H&R Block. And that was fun. I found something that was really exciting. When you work at doing taxes, people come in the door, you do their tax return, you save them money, they leave and they're happy. It wasn't like in real estate where you'd show maybe the same building, show it 100 times and nobody would buy it. Although if they did, that was my money for the whole year. So I realized that, wow, but with taxes, the person comes in, they're happy when they leave, they pay you. And that was really, something constructive. So I said, as much as I love real estate and it makes me a lot of money, as soon as I get a little extra money, which I soon got, I'm going to start my own little tax company. So after 2 years of working at Block, I started Tax Masters in the upper floor of our real estate office. We had an empty floor of offices. And that's how my company got started, Tax Masters Inc. And ever since, I've spent all of my time helping realtors save money on their taxes, because I realized that, if you work for a company and you have a W-2 form, that's one thing. And it can be a complicated tax return. But if you're self-employed, you don't have a boss. You're your boss, and it's up to you to save money for your retirement. You have to be responsible for your own healthcare insurance. Back in those days, that wasn't such a big expense. But things get much more complicated because if you're an employee, of course, you can't deduct driving and back and forth to work. That's commuting. But the minute you become self-employed, guess what? Your car becomes probably your biggest deduction. So everything it was wonderful. And it just, one client would come in and then they'd send their friends. And my company grew and grew and grew. At first, I only hired women. So the Washington Post would come out, ABC, NBC, CBS, and they would do interviews. Oh, this is Linda Marlor, and she has the only all-woman accounting company or tax accounting company in the Washington metropolitan area. So we got a lot of advertising for free, thanks to articles in the Washington Post and also on television. And this just made my business grow and grow. And pretty soon I realized that real estate, I would kept my license, of course, but real estate was just sort of a side thing compared to taxes. So I've spent the whole rest of my life, and that's quite a bit because I already have 6 grandchildren, so I'm a little older now. And my whole life has been devoted to helping self-employed people, entrepreneurs, not just realtors. We have all kinds of self-employed people, doctors, lawyers, insurance brokers, all kinds of people who own any kind of little business or big business, travel agencies, and helping them save money on their taxes. So Jennifer, this is where the magic wand comes in, because deductions for those people save federal, state, Social Security, and Medicare tax. Whereas if you just have a personal deduction, like you've given money to charity or something like that, that only saves you federal and state tax. So I go for the big deductions. I want the ones that get the big bang for the buck.
Well, and you went through that really fast, but go ahead and explain that again. So for anyone who doesn't understand, if you're self-employed, or even, and the other thing is if you have a home-based business, because sometimes what we've seen, especially this year in 2021, we're seeing a lot of people start a business at home that they never had a business at home before, and now they started a business at home, and so now they're eligible because even if they have a W-2, if they're starting a business, they're entrepreneur, and they get that advantage, right? The four times the deduction. Basically, that deduction ends up being times 4 instead of times 2, right?
Yes, and it's kind of complicated, but the best way to think about it is, let's say you live in a home, you have a mortgage on it, you have real estate taxes. And if you're a regular, normal citizen, you're a teacher, you work in a hospital as a nurse or something like that, or you're a CEO of a large company and you have a W-2 form. So great, wonderful. On your personal tax return, you get to deduct the real estate taxes, maybe not all of them, but the real estate taxes and your mortgage. And that's wonderful. It's absolutely fantastic. It saves you federal and state tax. But now, let's say you get a side gig, like you're starting to do part-time, perhaps real estate, or you have some kind of little business you're doing out of your home. I have a client, she does a spray suntan. I go to her house and I get my beautiful suntan, so I look like I've been to Key West with Jennifer, or something like that. So now you get to deduct part of your home as an office. I'll use my spray suntan lady. She has in her basement, a lower bedroom with a bathroom. So that whole bathroom has been converted to the spray suntan. So when we do her taxes, we get to deduct for her all of that bedroom and all of that bathroom, because that's her business location. She has her office in the bedroom part, and then she does the actual spraying of her clients in the bathroom part. So it ends up being about almost 10% of her home. So what does that mean? Now, not only do I get to take 90% of her mortgage and her real estate taxes on her personal part of the return, which saves how many taxes? Just 2, federal and state. But now I take 10% of the expense for her real estate taxes and her mortgage, and I deduct it as her office and home expense. And guess what? Yes, that's right. Yay, that's my girl. That saves her federal and state tax and Social Security and Medicare tax. So by dividing her house into the business portion and the personal portion, I get to save 2 more taxes on the business portion of it. And you would be amazed, Jennifer, you would be absolutely amazed at how few people know that they're entitled to claim an office and home expense. And this is well, it's not a recent deduction. In 1999, I helped get the laws changed, because back before 1999, if you claimed office and home, you could easily be audited. The IRS they would go nuts over it. It was almost an automatic audit. Matter of fact, one of the first audits I ever had, and this was 40 years ago, was for a client who did have an office in his home. And in those days, they actually wanted to come to the house and see it. And of course, I won the audit because, of course, I had done it correctly. Yes, right. I don't lose audits unless the client has told me a little fib. Sometimes that happens. But in any case, the laws in the old days used to be much more stringent. But however, in 1999, when they changed the law saying that anybody who has a business space in their home and they use that space regularly and exclusively for business. Now, it has to be an outside business. Unfortunately, it can't be like a teacher. And you know, teachers, they have such a hard job, because not only do they have their work at school, but they bring home things. And they many times, and most of the time, they're, correcting papers, or they're writing their syllabus or something like that. And they usually have a space in their home they use for business. But because they are an employee receiving a W-2 form at the end of the year, they cannot deduct their home office. Or somebody like a nurse, where you know how nurses, they have to pay an extra malpractice insurance, and sometimes they have some kind of a uniform that they wear to work in, and they have their sphygmomanometer. That's the thing. That's the blood pressure cuff. I'm a doctor's daughter, so I know how to spell it. Or they also have their stethoscope, things like that. They have this equipment and things that they buy to be a nurse, whether it's at a hospital or at somebody's office. but they can't deduct those things either because they're not self-employed. It's only the people who get the 1099 form at the end of the year, or they get income from the outside that nobody's withholding any taxes on. Those are the clients that I love helping the most, because they're entitled to a whole bunch of deductions that normal citizens who are not self-employed cannot claim. For instance, you as a realtor, Jennifer, you have your car. You actually have home office expense, and you have office and car expense, because my realtors tell me, at least before the COVID pandemic hit, they used to spend more time in their car than almost anywhere, sometimes as much as sleeping at night. Yeah. How many days have you spent in your car recently? Maybe a little more than before.
I was going to say, yeah, I mean, it's amazing because, well, and Washington, D.C., I'm licensed in Maryland, D.C., and Virginia. And so you're driving around 3 different jurisdictions, and it can put a lot of miles on that car. And you just spend a lot of time in the car, which is great for, listening to podcasts or listening to books on CD or on whatever electronic device you use. It's so funny. You remember we used to call it books on tape way back when.
Yes, remember the tape, yes.
Not tapes, not necessarily CDs, and maybe some kind of electronic app that you're listening to it on. Anyway, I digress. So it's really important also as an entrepreneur to realize, as real estate agents, we're entrepreneurs. We have our own business. But also, you mentioned one of the most overlooked deductions is that home and office expense. And again, it is so powerful to understand these deductions. But I know there are some other very, very common overlooked deductions. Will you talk about them?
Yes, and I love this one. I have 3, so we already did office and home. The second one is, it was invented to help farmers, because back in 1955, the Congress wanted people to be farmers. It was after the war, we needed food, and people were leaving the farm to go to cities. So what they decided to do, they said, we will treat farmers, which at that time was usually a husband and a wife, working together. We'll treat them as if they're a little company, and we'll let them deduct all of their medical bills as a business expense. So this law that was invented in the 1955 to help farmers, it also works for anybody who's self-employed who hires their spouse to work for them. Now, if you don't have a spouse, don't give up. You can still claim the deduction. You just have to be self-employed, which is easy because you are, and you also form a C corporation. And what this means is, well, if you're married, the example would be, we have Mary and she hires her husband, Fred. Now, Fred could be the director of a bank. He could have any full-time job he wants. But on weekends and sometimes weekdays at night, he helps Mary. He'll go out and he'll pound the signs, or he'll pick the signs up and bring them back to home, for sale signs, or he'll deliver papers, or if she has to show a property at night, he'll go with her just to make sure everything is safe. So she can pay him a little tiny salary. She has to give him a salary. And now he becomes her employee, which means he better follow orders. And what happens, but it also means that she can reimburse her employee for her employee's family's medical expense. So what happens is, every once in a while, Fred will go up to Mary and he'll say, hey, boss, my wife was very expensive this month. She went to the dentist and it was $500. And I bought new glasses and they were $500. And our children had some prescriptions, a couple hundred. I need to get reimbursed for my family's medical expense. So Mary, out of her business account, which saves 4 taxes, federal, state, Social Security, and Medicare, she'll write him a check for about $1,200. She will deduct it. Now, he's receiving the check, which goes into their family account, of course, but it's not taxable because it's not a payment, it's a reimbursement, and reimbursements are not taxable. So now all of that family's medical expense for the whole year, whether it's any unreimbursed medical expense that it wasn't covered by insurance, or the actual cost of insurance itself, all of those things are a business deduction. Now, yes, if she had not hired her husband, and sometimes it's the husband who's self-employed, he's a doctor, a lawyer, or whatever, he hires the wife. But if you don't hire your spouse, or if you don't hire yourself in your own corporation, then your medical bills are just about worth zero. Because in order to claim medical, they have to exceed 7.5% of your adjusted gross income, not your net income, your adjusted gross income. So we say we have a husband and wife, they each make $50,000. Their income at that point would be $100,000. So the first $7,500 of medical that they incur is not the least bit deductible. However, the minute one of them hires the other, all of that first $7,500 becomes deductible. I call this alchemy. It's sort of like you're taking lead and turning it into gold. What I'm doing is I'm taking non-deductible personal expenses, and I just turned them into fully deductible business expenses. So from saving 0 taxes to 4 taxes. Which would you rather save, Jennifer, 0 or 4?
4 taxes. And I think that's the other thing is understanding that it's 4 different taxes. So that ends up compounding your savings by, multiple of 4. I mean, that's a really big deal. And again, that's why I said to you at the top of the hour that this is so often overlooked. And again, because taxes are something that most people go, I don't understand. And so they just, they leave it to their accountant. But sometimes an accountant, and I know you with your firm with Tax Masters, you have no problem. If people are interested, you will review their last year's tax returns. And then you take the school teacher approach and you pull out your red pen and you start circling all of the deductions that were missed and how much extra money that someone paid to the IRS because they didn't understand all the deductions. And I always love that scenario or that analogy in that, you get the school teacher, and part of it is because if we don't understand it, we won't be able to apply it. We won't be able to go into action. And I think that is so, so important. So 4 times the taxes. So something you just talked about going from a personal expense to a business expense, and then being able to take 4 different ways, you're going to get a tax benefit from it, which is so, so important. Oh my gosh. Well, I love you and I can't wait to have you back. I thank you so much for being here. And as you know, John, I know he'll come off his mic, but we always end the show with the yay. So I'm going to say 3, 2, 1. Yay!
Yay! Yay! Yay! Yay! Yay!
Hi, I'm Jack Canfield. You may know me as the co-author of the Chicken Soup for the Soul series. And if you want more help in getting from where you are to where you want to be, I want to encourage you to listen to the Jennifer Hammond Show